Well, it was the best week of 2024 in the markets last week, and we're going to talk more about that. But it was just kind of a blowout across the board. Pretty much all sectors, stocks, anything you could think of was pretty much up last week. So great week to be an investor. Let's dig into some of the numbers. I'm Mike Minter. This is your Market in Minutes report. We're looking back on September 9th through the 13th. And let's dig into the numbers here and see what occurred. So we're looking at the 5-day performance here, and of course, as I said, it was just stellar across the board, really for the broad market and even some of the smaller niche markets like the Russell 2000. Really phenomenal returns, and as we can see as well, tech just kind of blew it out of the ballpark. Up almost 6%. So. Fantastic week, and I think this is just leading into the Fed's meeting this week, which is set to occur tomorrow and then Wednesday. Highly anticipated that they will reduce rates. I'd be absolutely shocked if they did not. In fact, it's actually looking like they're considering a 50 basis point rate reduction as opposed to a quarter point. Still no 100% consensus on anything, but it's looking like a lot of the traders are anticipating more of a 50 basis point cut than a 25 basis point cut. So, which would be a fairly aggressive cut. So we'll see. But the bottom line is the market is definitely anticipating rate cuts, and so that's been a positive and a real boon for the markets. So year-to-date performance climbing back up. So Dow Jones at 11%, S&P 500 at 19%, the Russell at 9% now, which is great considering where it's come from. Nasdaq up 18 and some change, and the foreign developed markets are up just shy of 11%. So across the board, just really great returns for the year. And this is also a big story as we've been tracking rates. The 30-year now down below 4%. And as you can see on down the line, we are below that 4% marker across the board on the 30, the 10, and the 2. And the yield curve is no longer inverted. You're getting more for a 30-year, the longer you go out in terms of yield versus the 10-year and then versus the 2-year. So this has occurred over the last few weeks, but the yield curve has been de-inverting or uninverting, I guess I should say, and now it's clearly on that track. So good news in terms of normalization of rates. That's what you want to see, an upward sloping yield curve. And 30-year mortgage, so that continues to come down. So it's now at 6.73. It kind of been bouncing around, but well below that 7% mark. So again, good for the home market and good for buyers out there. So hopefully that helps if you are in the market for a house. Wednesday to remember. Let's talk about the story behind all this. So stocks bounced out of the gate at the start of the week as risk-on investors made moves before the pending release of the twin inflation reports. This was the Consumer Price Index and Producer Price Index. The three major averages added slightly more than 1% in Monday trading. So good day on Monday. On Wednesday, stocks initially dipped following the release of the CPI as traders appeared disappointed by the report. So by midday, sentiment changed. So we were very up and down, a roller coaster on Wednesday. The S&P was down as much as 1.6% in early trading and then gained 1.1% by the closing bell. So very down and then up. Then more inflation data came out Thursday. Showed wholesale price increases were tempered, and this really helped stocks move higher throughout the remainder of the week. Small caps shined here. So as we talked about, everything was up across the board, obviously, but it was nice to see small caps really take off given their struggles over the last couple of years. But small cap stocks, measured by the Russell 2000, pushed higher, and they've been pushing higher in recent weeks. And so this is a telling move for some Wall Street observers. So the Russell 2000 has outperformed the S&P 500 by more than 4% during this quarter, during the third quarter. So we're continuing, even though very volatile, small caps are very volatile, they're up and down, continuing to see this broadening out of the rally as small caps are participating, which is a positive sign. So one reason that smaller caps tend to respond when they anticipate interest rates will trend lower. So as we've talked about numerous times, small cap stocks are much more sensitive to interest rates and economically sensitive within the trends of the business cycle. So just more susceptible to those types of things. They have access to not as much access to capital as the larger cap companies, and a lot of times have to accept floating rate loans and things like that. So just much more economically sensitive. So when things are looking up, small caps tend to do better. So investors appear to be positioning themselves in small cap issues, expecting the Fed may adjust rates at its September meeting as it looks to guide the economy to a soft landing. Rate reductions will be really good for small cap stocks. So, and it has been. Even the anticipation of lower rates has been good. So hopefully see some more of that. So what's on deck this week? So we got some key economic data coming up today. Empire State Manufacturing. Tuesday, of course, FOMC, the Fed meeting. Retail sales, industrial production, Fed official Lori Logan speaks. And Wednesday, we'll have a continuation of the Fed meeting. Powell will speak at some point in the Fed chair press conference. And then Thursday, we have existing home sales, weekly jobless claims. Friday, Fed official Patrick Harker speaks, and companies reporting earnings over here. Not a big week, General Mills and FedEx. And that rounds out the report for this week, folks. Appreciate you tuning in. Here is all of our contact information if you need to get a hold of us. And hit that subscribe button down below. We'd love to have you as a normal subscriber to our videos if you haven't already. So this week really is all about the Fed announcement, and we will be waiting to hear that, and I'll report back to you next week on what we find throughout the week. So again, folks, thanks so much for tuning in. Here's some disclosures for you, and we will talk to you soon. Thanks, guys.